All right. Welcome everybody who is able to join. Thank you, Uriah, Jay from Las Vegas, Lena, right there from, I think, Milwaukee, I think, and then Lexi, and then Ray, of course, Sean, and then Orange County, I think, and then Jason and Steve, and a lot of other people will be joining. Thanks so much for coming in. I would love to share my screen and let's get started. Let's get started with this one. I hope you really would love all the things that I'll be discussing and a little bit about me. Again, today is the Accredited Investors Blueprint. I call it cash flow with hotels and senior living because, as you know, multifamily has kind of gotten a little bad rap last 2, 3 years, and rightly so because the distributions are not there and the rents have not increased as much as people expected to, and regression of rent we call it, all those things. But I would like to really share with you great ideas in both these different markets which really make big sense. And I've been multifamily guy for the last 20 years, by the way. But last 5, 6 years, I've shifted my thinking a little bit because as overselling was going on, price of everything was going higher and higher. What can I do which can bring cash flow to my investors? So we got into the hotel, senior living. So we'll talk about all that. My cell number is there. If anybody wants to reach me directly, you could definitely reach me 925-766-3518. Hi, I'm Vinney Chopra, Vinney Smile Chopra. I smile a lot. I'm thrilled that you are here. I do have to say that disclaimer, this webinar is for entertainment and educational purposes only, should not be considered as legal, accounting, or investment advice at all. This webinar does not represent an offer to sell or a solicitation of an offer to purchase an investment or security. If you are interested, please let Asma know, my associate, or let me know through the texting or emailing like that. The information presented is believed to be accurate and reliable, with no representation or warranties. And then please consult with your own attorney, financial advisor, CPA for legal matters, investments, because I'm not a CPA and I'm not an attorney or anything. So no distractions. And we do about 1 hour, 1 hour. A little bit about me. Some of you might know me. I'm a mechanical engineer from India who came to this country with $7 in my pocket to do my master's in marketing. From George Washington University in Washington, D.C. I sold door to door 13 hours a day. 80 hours a week. I worked door to door, knocking on doors, selling books and Bibles door to door. Husband, I've been married 45 years gracefully with my lovely wife, Kanchan, and our two children, Neil and Monica. We live near San Francisco, by the way, California. So Monica and Neil, that's why our company's name is Monil, our kids' name put together. Previous California broker for 20 years. I have been bought for family 40 years back. Duplex, many 11 companies I started and 7,500 units as GP interest on the loan principal. Here, I didn't know anything about anything, literally. Yeah, I'm telling you the truth. And you can learn everything if you put your mind to it. That's what I come to realize. And I learned it through coaching, through coaches and mentorship programs. So anyway, I also wrote 3 books, also host of 2 shows, Abundance Mindset Show, author of 3 best-selling books, also on Amazon, general partner, and everything. Okay, let's just go further. And you might like to see me even afterwards if you want to. My 3 books are on Audible also, right there. And then my 2 shows are here, and my apartment syndication made easy, my podcast, which is one of the top podcasts, I think number 11 in USA. These are my 3 books. And for just attending today's webinar, you'll be getting a free copy, digital copy of all 3 books, and also the audible copy so that you could listen to it in the car about, this one, apartment syndication made easy, or senior living. I'm writing my 4th book, which will be on hotels, investing made easy right there. This is my positivity brings profitability. But this is the scan code. If you have a phone, maybe if you're Seeing me on the phone, it'll be hard, but you could scan that and get it for free. So get a free copy. You could even get it from a free copy here. I don't think there is a link. You could go to vinneychopra.com. Asma, could you put that, please, in the chat? vinneychopra.com/free book. You get all three
Of
books,
course,
or
Amir.
you could say free benefits. Free benefits. Let's go here. This is my lovely family. I really get inspiration from them. Our kids have grown up now and so forth. And our Monica daughter is fully involved in our business and so forth. So let's talk about why I shifted my focus from going from multifamily, where everybody talked about for 15, 20 years and made a lot of money for my investors and myself. Why did I shift? Because what happened last 4 years back was the interest rates went up. And not only that, people were overpaying and overpaying and overpaying. The numbers, the underwriting were not, numbers were not good. The cash flow numbers were not good. And that's the beauty of it. You got to buy the right product at the right time. So that's why for the last 4 years, I've not bought much multifamily at all. That's the other thing. I've been selling though. I've been selling at the peak, all big, my apartments and everything. But what I found was senior living was some market with baby boomers turning 65. Baby boomers, 10,000 of baby boomers are turning 65 every night in USA. So there is a silver tsunami going on. That's what I wanted to look into 6 years back. And that's why I got into that market. Other thing I did also 6 years back was to look into hospitality. It's been really, really good me to think if the multifamily can make profits, the hotels can make profit. It's the multifamily where you change the rent every night. That's hotels. So it's a very similar to multifamily, but on a steroids, I call it. So that's what we're going to talk about today: senior living and hotels, how you could really benefit with these two special places. And please have your questions ready. Please put it in the chat so that I can answer them as I take a little breather in my presentation. I love to handle all the questions on your mind because it's webinar is for you. The investment opportunity. Why many investors focus on traditional residential and commercial properties like me, savvy accredited investors are capitalizing on two overlooked sectors, which I just mentioned, because of the senior living. The seniors need more help with housing. The other part is tourism has gone back and even bigger than what it was in the pandemic when the 2020 pandemic came, COVID and all that. The occupancies went down and everything, but now the hotels are making money like crazy. The occupancies have gone up. The average daily rate rent per room, average daily rate ADR, it's called, has gone up, and that's the beauty. That's the beauty of it. So we'll talk about all that. So this is it right there. Oh my gosh, there it is. Aging America, the demographic tsunami. I just mentioned to you about that one. Population surge: 79.2 Americans will be 65 plus in just next 10 years. Hold on. 25% of all the population is going to be seniors in the 65, 70, 80, 90 years of age. So there is a population surge is coming, and explosive demand is coming for, if you look over here, it's just amazing. 173% annually. So it's going to be such a great, unprecedented supply gap, which we are predicting for the silver tsunami, the demographic shifts, and everything like that. So that's something to really look at. So hotels and senior living, two recession-resistant cash flowing engines. Why do I say that? I've seen that happen. I bought a hotel just before COVID, actually, Hilton Garden Inn for $6 million. And my partner and I, we bought it and then we sold it after COVID, after getting the occupancy up and everything for $12 million. That's a lot of cash, a lot of equity gain of 6 million. But then we did 1031 and bought a Wyndham Garden. If I have time, I'd love to show you those hotels in Texas. So Wyndham Garden, we bought it for 13 million 5 in 2022. So it's only 2.5 years back or 3 years back, let's say. So we are selling that now for about 17.5. That's a $4 million profit again. And senior living, I built one Punta Gorda senior living for 12 million 100 and sold it for 16 million 9. 16 million 9. So that there are amazing opportunities, amazing. And the one thing I want to talk about is these two sectors too recession resistant because the occupancy has stayed very strong after COVID in the senior living. As a matter of fact, if you look at the graph of everything going down in the recession of 2008 and 9 and 10, senior living just took a little dip, very little dip. COVID also, it took a little bit dip because people wanted to take seniors, their parents out because of COVID into their homes. Then they went back to the centers or assisted livings and so on like that. So stable income meets growing demand. That's the big thing. Because if the income is there, revenue is there on the top, and expenses are well managed, that's where it comes the profit or the NOI. Total revenue minus the expenses is the net operating income. And when from the net operating income you take out the mortgage interest, the principal, and any other management fees or whatever, then it comes the cash flow. And cash flow is king. 20 years I've always bought the products or the commercial real estates which cash flow, not the cap rate, not anything else. Location has to be there. The upward trend in the economy or emerging market, I call it, has to be there. And then making sure that the business plan is put into place right there, stable. So senior living market landscape, again, it's just diverse ecosystem of property types. It's not regular homes, but seniors like to live in communities of 55 plus or on the golf course or retiring, those rich seniors. Of course, assisted living is another place where they need to go if they need help in cooking or dressing up or bathing or driving. So that's where I have been in assisted living and memory care, as a lot of people get dementia and memory care loss. So those are the two where I find there are lots and lots of opportunities right there. Of course, there are so many graphs. If you just chat GPT, what's the shortage of senior living supply in your zip code, you could do that. And you will be surprised. Or in your state, you just say that to chat GPT, you will come up with so many different reports that have been put out there. So the thing is like, these are recent, examples. These are cash flowing senior living portfolios, like somebody sold 7 property portfolio with these units across Ohio and Kentucky. I was just doing some research, not mine, benefiting from the strong Medicaid rates increase in 92% occupancy. Look at that. Investor returns of 17.2% IRR over 38-month period hold. Not bad. That's a 3-year hold only. They made very, very good money. Then North Carolina, 85 units, assisted living, memory care turnaround with a comprehensive operational improvements. NOI increased 31. So these are examples, real examples that you could find of the people who are able to do it. I've done very well. Also, financing power again. So many loans are given out just in Q2 only 2025. $650 million senior housing loans were awarded right there from the Dwight Capital Bridge, right this much, then the Florida portfolio financing and the Ziegler. Again, this will help us a little bit to understand where the market is going. Then why hotels complement senior living investments, hotels offer a perfect, complement, because in the hotel, cash flow drivers and the market resilience are the two things. So location, 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 we always say that, right? In hotels also, it's a very, very good model. You can have direct ownership, full control of the cash flowing properties, or you can have just the real estate syndications, which I do, by the way, pooling of the capital with other accredited investors for larger hotels, larger apartments, larger senior livings. So people like me are fund managers kind of thing, or we do joint partnerships with experienced operators. So that's another way. As accredited investors yourself, you could learn the business and then form a team with other syndicators or fund manager, and then maybe you bring your qualities along with theirs, and you could find a great deal, and then you could invest in it as a general partner, we call it. Or you could invest into somebody's deal as limited partner. Limited partner means you will get the cash flow, okay, of the asset. Also, you will get the upside. That's the beauty of it. You get just not just the cash flow distributions, but you also share the profits when the property is higher and higher and higher, and then they sell it. And I'll show an example. Actually, we are buying in a hotel. That might be a good way for you to ask me some questions. Also, that'll be tremendous. Then joint ventures can be done, and then of course, occupancy growth has come back. A lot more NOI increases are happening. Cash on cash returns of 9, 10, 11, 12% is happening in the hotels there. Accredited investor advantage, that you unlock the access to exclusive investments too. See, if you're sophisticated or non-accredited, then lots of syndicators or people who get good deals cannot open up, or show you that. That's kind of sad. But SEC is looking at how they can qualify non-accredited investors by learning the, financial terms and courses and things like that. So they are savvy to look at what, the investments are about and make good decisions. But I always say to my investors, show this package to your CPA, to your attorney, to your pastor at church, to your family, to your relatives, so that they can look at it, and they will give you some good ideas whether the thing you're looking at is a good deal or not a good deal. That way. Don't give money to anybody unless you are totally sure about it. You want to make sure that you preservation of capital is number one, then growth of capital and distributions. Those are the three things I look for. So what makes you an accredited investor? Many of you already know that. The income threshold is 200K individuals or 300K, and then entities meeting tests like trust and LLCs with qualifying assets. Net worth require either this or this. Usually it qualifies you as an accredited investor. So 1 million excluding the primary residence, the net worth will get you also into accredited investor status. Then professional certifications, if you have FINRA series, 7, 65, 82, you also qualify right away. And knowledgeable employees or executives or investment roles at the fund level in my company, they also qualify like that. So why senior living hotels? High barriers to entry, institutional grade due diligence is needed. Due diligence is needed anytime because you're buying millions of dollars of things. You definitely want to make sure that the people at the top have good track records, that they can qualify for loans, they can operate, and they want to make sure that they are going to implement what kind of things they will implement. Let's see if we have some chat, some questions. I'll kind of stop by and let's talk about the questions right now.
Mm.
Okay, let's
We
go
only have
here.
one question so far, Vinny G.
Oh,
That is from
okay.
Uriah Hegwood. He's asking, what if we don't have the money to make a big investment like that?
Okay, very good question. Uriah, I would say you are 100. I also, by the way, started with only $1,000. We had some money, but my family didn't believe in me, that I'll be able to learn this business and get better at talking to investors and showing them my PowerPoint presentation. And then we were able to buy 14 units. 14 units, that's my start in this life, a duplex actually. We bought 2 units first, then 14 units for $180,000. That's where I started. And it's like pooling of the money. So, Uriah, I would say if you don't have much investments or money, don't worry. The key thing is to collect like minded people and then you form a group. That's when you are learning from internet, from different free courses. You could get my course if you want for very cheap. I mean, we're just giving for $45. It's got 172 lectures, whatever it is. So the key thing is you want to learn how to pool the money together. That's how I started. So I hope that answers the question. But the big thing is again saving. You got to save the money to invest passively or learn how to pool the money together with friends and family and everything. That's how I got started. And now we have 582 investors. From one investor, we have so many now. So that kind of thing. Thank you. I enjoyed touring ALF properties with Vinney in Williamsburg. Oh my gosh. David, how are you, brother? Oh my gosh. So good to meet you. So good to meet you. I still remember you drove all the way from your place in Maryland or near to DC and came to meet me. And thank you so much. We stayed breakfast at the Wyndham and so nice. So nice to. Oh, thank you, Uriah. Thank you so much. Very helpful. And David Harrison, so nice to meet you, brother. And guess what? I mean, that property, my senior living, is opening up in about 6 weeks. Can you believe that? 6 weeks, yeah. What happened was the old GC left. Oh my gosh, I had so many troubles, and now we have a new GC. So, some of these construction things take so much time, so much energy, and so forth. David, nice to meet you. Nice to meet you. So, let's go further. The thing is, you definitely want to evaluate. Don't put money, don't give it out. Just it's hard earned money, your hard earned money. You want to really vet the deal. You want to understand what they are trying to sell you or ask you to invest in and so forth. So it all depends on, the location intelligence is the aging population density, the healthcare access, competitive supply within 5 mile radius. All these are key due diligence factors you should be asking. Facility design, quality, actually they should be showing you everything, because then only you can make a very wise decision whether you want to, and what's the cost segregation, how much will be the tax benefits. You should ask that. Who is the operator? What's their expertise? And uh, access their track records and financial reserves and management system, everything. And then regulatory compliance, especially in the senior living, you have to be totally on top of everything happening from the state, from the city, and fire departments and all that. So I just put it there a little bit. So the thing is, you want to look for at least 8% pref return with your quarterly distributions, getting, and 50-50 split after pref rate is hurdle. Many people even give 70-30, 60-40. 60-40 means 60 to the investors, LPs, and 40 to the partners. And even 80 and 20, like the one I'll share with you in a second, is going to kind of have some questions for me. So hotel investment, how to evaluate hotel investments will kind of show you. I think let's do a case study that will mean lot and lot to you. I think that will do it right now. So hotel investment due diligence essentials and market analysis, and I'll kind of share with you the case study that I prepared, and property assessment, how we did it, what we did, management review, what we did, and revenue and operations, how we going to do a great job in this hotel. So acquisition and renovation is what we're going to talk about. So let me go ahead and kind of come out of this right there. And I'll go to this PowerPoint presentation, which is this one. And please do stop me. Please stop me so that I can, again, I do want to say that it's a 506C offering for accredited investors only. That's why I can talk about it in the open to everybody who is on the webinar, but you have to invest. If you plan to invest in it, if you do think that way, please reach out to Asma or me later on. We'll be able to go even more detail with you. So this is actually in 506C offering. We could talk about it in the open, in the public, you know. That's why I'm doing it right now. So essentially, these are all those disclaimers. You know, every lawyer will tell us, you know, to put all those things, that the forward statements, backward statements, all that. So let's take a look at it. Why did we get into this hotel investment opportunity? I would like to take you through last 6 months, because this hotel just didn't fall into our lap from above. No, 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 no. It took us so much time, effort, talking to the bank. What? Aha. So it's not been sold by the seller. The seller is the bank who it got foreclosed on after COVID. And now Courtyard Marriott Plano Legacy West, which is a beautiful area of north of Dallas, Plano and McKinney. I'm thinking about Frisco, the Colony, Richardson, I think, or Garland, and all those areas are very beautiful areas. I was there, just came back from there. Why did we find out? How we? It took us 6 months to get this hotel, by the way, and it's a bank owned asset. Remember, you want the right location, and then you want to buy the right product. You just cannot buy anything that's on the market. You got to do underwriting reports and all. And we have done all that, you know. So it's a bank owned, which is a good thing, acquired at a rare discount of 65% below replacement cost. So we are paying for this big hotel 14.5 million only just to build it. At this time, it's going to cost us 24 plus million with old style, even, you know, right there. So let's just say that. Oh, secondly, 35 offers came. So it means this property, this location is in a lot of people's mind. So it's a good thing when a lot of people try to buy that same asset. It means they did their penciling and underwriting, and they feel there is profit to be made. So that's a good thing. If the broker says to you, "Oh, I have some offers," let them not lie to you, but ask them, "Oh, by the way, what kind of offer are you getting?" And so on. So we won the deal, one winner. Oh my gosh, 35 offers, one winner. Our team insider access and proven execution gave us the edge. My partner, who is my co partner, JP, his office is 10 minutes away from this location. So he had been looking at this hotel. He's in hotel for 25 years. He's been looking at this hotel for so long, through the COVID, through everything. And then we approached the bank, I think in December last year. And today, look at that, it's August, 8th month. Look at that. But the thing is, these things take time. Take time. So then they started getting more offers. The more offers, they didn't want to give us that anyway. But we did get it, and we put 500,000 non-refundable money. $500,000 non-refundable means that if we don't close on it, if we don't get a loan on it, and we cannot raise the equity or the down payment, then we lose 500,000. Wow. Wow. So we liked it so much. We know it's going to be a very, very good, deal for us. And we are also putting $4 million, 3.97 million in renovations to elevate the asset, drive the higher rates and occupancy, and change this courtyard Marriott from generation 2 to generation 6. So it will be like a brand new hotel, by the way, once we are done with it. And we're going to be having a 20-year contract with Marriott. They've given us already agreement of 20 years to have this, flag on this property. And we are also enhancing that by unique top golf amenities that will drive our bistro, our restaurant, and things like that. Anyway, and we have 200 plus years of hotel experience, by the way. Sorry, I just didn't do that. But our partners are, and myself, we have lots and lots of, hotel experiences and all. Anyway, but this slide kind of talks about depreciation, great tax benefits, recession resistant and in-house innovation advantage, because we'll be doing it within our house, our company. All the renovations, we have done it many, many, many times over. Vertical integration of operations. So we'll be cutting down the expenses, managing it within our own company. So that's the best part, which is it will bring stay. It's already is occupied, occupancy is there, money is being made. And when we do renovations, we will do it wing by wing by wing. We will never close down the hotel. That's why we can pay the distributions to our limited partners. That's what that is. Okay, let me just go. It's 153 rooms, by the way. What? 153 built in 1998. Not that bad. 3.77 acres of land and all that stuff. It looks pretty good. It's old. It's antiquated, we call it. And what we're going to do with this money internally, we're going to change these hotel rooms into brand new hotel rooms like this. The whole thing will be totally revamped and new furniture, new fixtures, new lighting, new carpet, new everything. Everything will be all brand new. So it's going to become a beautiful hotel. The front looks like this, very good bones, we call it, but it's going to be courtyard. And it's going to be new facelift will be given to the same hotel. And then it's going to look very nice inside, the colors, schemes, and all that. And then bistro will be also renovated, all that good stuff. And all that will be done for 4 million. And oh, Top Golf. We are putting 2 suites of Top Golf also, because this location is very close to Fortune 500, Fortune 100 headquarters north of Dallas. So lots of, the company business travelers come and they would love to unwind and play golf inside the hotel, Top Golf and things like that. Anyway, so let's just go a little bit more. Again, our whole structure is usually 30% ownership. We do, which is general partners, 70% ownership is limited partners. And then we are expecting to double people's money. Like if they give us 100,000, they'll be able to get like almost 19, 20% return. And these are the splits 70, 30, 75, 80, 20 in the cash flow and so forth like that. But I think there is another slide which kind of shows in more detail. Anyway, but please ask me any question. I'm sure you have some questions for me.
Vinny ji, we have one question from Sean.
Hello,
He's
Sean.
asking who determines replacement cost.
Okay, very good point. Very good point. I would say we just ask them, our internal, we have done it lots and lots and lots of times, the renovations and build ups of brand new hotels, Sean. So we just took a $24 million number, rough estimates. It could be even lot more. If you want to build a brand new in that location, just the land we found out will be even much higher. So we are really getting a strong deal at 14.5 million. We are buying at 14.5. We are putting 4 million into it, give or take, right? And plus some closing costs and this, that. Then we are planning to sell it in 4 years at $30 million, 29 to 30 million. And that's a conservative estimate, because all the brokers, real estate brokers told us it will go for at least $34 million. And we are projecting in our numbers that we shared with you at 29 million exit. So if we go higher, like $5 million more profits, then 70% of that will be given to the investors. So that's another 3.5 million more. So I hope I answered the best I could, right there. So cash flow, demand, property, all that, I just will take it to you right there. All these are beautiful property, but it's old, it's antiquated, and we want to build it a brand new, like a Generation 6 Courtyard Marriott. It'll be 2026 model, by the way, so the investors can feel really good about owning it, and investing in it and so forth. So essentially, I, I don't know where I can take you a little bit more. We are raising like 7 million. We have 90% raised already, by the way, in month and a half. So we have just very few spots left, but this might be good to see. Everybody could see that, by the way. So if any investor limited partner puts in $100,000, as you can see this, and in the first year, we are projecting to give them 8.05% distribution. So quarterly paid of that. So 2% every quarter kind of given. Second year, we are expecting that's the year we'll be renovating. Also, big time because we have to order the furniture, order everything. And that takes about 5 to 6 months to build 150 rooms, materials, and fixtures. So that's when we are thinking in 2026, we'll be closing down section by section, not closing down the hotel. That'll be still operating, but we'll be able to renovate them, wing by wing by wing. And that's when it's going to jump. As you see, the cash flow is going to jump to 10.53 estimated. This is all projected. Please do look at it, projected. And we really believe that this will happen. And then, of course, the occupancy will go up even higher, higher, higher. And then ADR, average daily rate, because of new rooms, that's going to go higher also. That's why we could, project to give 10.53 cash flow in third year, 12.05, then 13.79%. Wow, amazing returns, almost like on 100,000, 53,000 in just the cash flows, quarterly cash flows alone. Then in 4.5 year or fifth year, we'll put it on sale. That's our game plan. We want to renovate it, get it ready, get it all scaled up, increase the revenues so that we could sell it at 29 million. When we do that, this is what you will get back. So 100,000 investment will bring you 147,000. 100 is your initial capital plus 40,000 equity gain, just like over here we did that. This is cash flow. This is equity gain. Total is 100. On the total of 100, you are getting back almost 200, doubling the money, we call it like that. Then 250, it goes higher and higher. And then we go, there are 4 tiers, 100,000 to 50, then 500, it even goes higher, percentages, blah, blah. Then 1 million is higher and higher. You could see that, so the property is producing really, really good, cash flows. Okay, I think I would love to answer. Location was something which I mentioned to you all. Whenever you are looking to invest with anybody, myself or anybody, please determine where the property is. Could be senior living, could be apartments, could be hotels, whatever, or storage units, or car washes. A lot of people are investing into all those things. The biggest thing is you want to see location and how is the growth going to happen. How will the occupancy is going to increase in this hotel kind of thing, and also how will it increase the average daily rates. That's where the main thing comes in. So biggest property sales investment market in 2022 was Dallas, right there. Still it's going on. And then Fortune 500, 23 of those Fortune 500 company headquarters are there in the Dallas area. Number two, hosted global 50 companies. And these are all the different, you could see how many different companies are right around there. 49 Fortune 1000 headquarters are all around there. And this property is right there. The hotel is right there in Plano, Texas, right there. So people will be coming And then this is a leading another chart which shows how the migration is happening. A lot of companies are moving from California. Look at that. The biggest list is from my state of California. I live near San Francisco. And a lot of companies have moved to right from California all the way to Dallas area and all over. It's happening, the whole thing, because Dallas is so central. They love that. They can travel out both coasts, in 2.5 hours or whatever it is. Then regional population increases there. Dallas is showing up right number 4 after Chicago. Wow. And Houston is catching on right behind, then Washington, D.C., and so on. So location is big thing. Every time when you're looking at a deal, you should really think through how the business plan is going to be put into place. If the business plan cannot be put into place, the renovations and also the streaming of the revenues and the expenses going down, that will increase the EBITDA in hotels. It's called earnings before interest and taxes and everything. EBITDA is the word they use it. So the key thing is you want to really make sure what you are investing in, that you feel totally comfortable with it. Again, renowned tech and innovation hub. Look at that, number 1, number 3 metro country, number 5, number 7. I mean, you can just go on and on and on. How the Dallas has just taken over the world, actually. My gosh. And it's still going on. Still, the aviation, aerospace, there were two big international flight airports. Now there'll be another one, the north side. They are looking into big expansions also over there. So that's another one big will be driving digital infrastructure. Huge. Look at that all around. These are the number 8 in the global data center market size right there in Dallas areas. So lots of business travels will be coming from their global trades from all around the world. Lots and lots of global trades are coming and giving into the DLF. Great. We like that, because all these things make us really that we making a good, wise decision to buy this asset. And Plano, Texas, that's where it's located. So that's a big one, a thriving center for business and innovation. That really caught us big time when we looked at all these numbers and businesses and Forbes 500. That just told us we want to go for it, even though we gave $500,000 non-refundable we gave to the bank, and we're going to close in 30 to 45 days. We are closing. Best city in Texas to raise family, number 4 in USA. Best city in Texas to find a job, number 9 in USA. Then happiest city in Texas, and the best park system, all those things. Great. And this is, we love this too. Disney bought a 1,000-acre community only 35 minutes away from this hotel. So that is going to bring families also, because Disney is planning a master plan residential and entertainment community. I think the park they're making is for children, not for adults, but children, but parents come with children. So they know what to get, right there. Market opportunity, world-class retail, and international, all those things. Any questions, please, Asma? Any questions for me?
We have one question from Uriah
Please. Yes.
Genuinity. This may be
Uh-huh.
off topic, but have you worked in wholesaling at all?
Oh, okay. We don't wholesale at all any of these properties. We do so much hard work to find one. Then we just take over. We just buy them ourselves, put our business plan into it. But you could partner with us if you think you have money to invest and become partner. You could bring proposals. We have so many hotels in the pipeline. It's mind blowing because my partners have been in business 25 years. I got into hotels 6 years back, 6 years, yeah, back. And, even before that, I had another one, but big time. It really happened in last 5, 6 years. So these are the competition. We show it in the brochure also. If anybody wants this brochure, please let Asma know. If you don't mind, put your email
Yeah, guys,
address
if
or
you're
your name.
interested,
Yeah. Mhm.
please
Please.
drop your email addresses and I will make
And
sure to email this to you.
totally, totally. And the thing is, we would love to show you. Everything is totally transparent. This hotel in 2019 collected $6 million. Remember, I mentioned in the early part of my presentation, but after COVID, it went to 1.115. Look at that. Total profit went down, and the revenues went down from 6 million to 1.640, minus the rooms, charges, and expenses, 115. See? Then it tried to go to only 1.65, then 2.9, then 3.5. So now, when they started to unload it, they had brought it back a little bit, but not where it should be. That's when we started talking to the bank, and it took us 6 months actually. We got this 2 months back awarded to us. So that'll be like in June. June, we got the contract. So now we are closing, in 60 days. And then these are all the sources and uses. Everything is very open, very frank, everything for everybody to listen and watch and all that in the packet. There is nothing hidden, especially when we do the funds or syndications. You have to be totally transparent, monthly reports, quarterly analysis, distributions, communication, all those things. Oh, by the way, that's towards the end. So that's me, Vinney Chopra, who is the CEO and the principal, and my daughter, our daughter. Monica Chopra is also partner in the business, my wife. We are a boutique company. And then our partner, whose office is right there, 10 minutes away from this property, and who has done 203 total hotel projects delivered. Literally, 91 new built hotels, 101 hotel acquisitions, and 11 adaptive reuse high rise projects. He's our partner. He was just at our place 2 days back. He's got 14 hotels in Northern California, right here in Livermore, in Merced, in Modesto, in Walnut Creek, and over there in Santa Rosa, Petaluma, all over the place in San Jose. So he was here and we had great time together and so on like that. So if you are interested in looking at this further, and then you may decide to, or if anybody accredited investor, you have to be accredited investor to invest in it because it's a 506c offering, which verifiable accredited investors. You can't just say I am one, but you have to produce the letter. So let's go back to our
Yeah,
previous
We have one
present.
question from Lexi.
Please. Yes, yes, yes.
The returns amount to 8,500 per quarter for 5 years, totaling 170,000 over the period. Considering the initial investment of 120,000, this results in a 50% return on the initial investment. Is that correct?
No, no, no. Okay, I'm glad. It's a very good question. Very, very good question. Essentially, when we say you will get 8% or 8.25%, that's for the whole year. It's a yearly return. So 5 times 8.5 or 9 or whatever, that will come to, like, I think in 100,000 will be 53,000, if I remember correctly. So you'll be getting in 5 years 53,000 total distributions given, projected, by the way. It can be that much, it can be more, it can be a little bit less, but our best estimates, we projected this to happen. And then 47%, the one I showed you, is from the equity gain. When we sell the hotel, we put so much money into it, and then when we sell it, we'll see the profit, and we share that profit with the investors. So you are our partners, uh, equity partners, we call this, as LPs, limited partners, equity partners. So it's about, I would say, 20% per year. That's all it is, not 50%. No, no, no. Nobody can give 50% a year. Maybe in crypto, crypto or something like that. But this is doubling your money in 5 years. So what that means is maybe 20% per year times five is 100%. So your 100 will become 200. That's what that chart showed. Not, huh? I hope that answers your question. So please, you do let us know if you want to be interested in passively investing. in this great asset or anything we come in the future, you could join our investor club, which, for accredited investors only. We do all kind of things, senior livings, as assisted livings, the multifamily B class, hotels, all those things. You could just go to vinneychopra.com/invest right there. And then, oh my gosh, just because you are also here, you can also come to my free mastermind class if you want to learn more, by the way. So, 4 free sessions you can come, and I teach also on every Wednesday, 4 p.m. PST to 5:30 PST, or 7 p.m. EST to 8:30. And it's in my Zoom. That's the Zoom, if you can write it down, or you could text it, or you could put it in the chat. Can you please? Huh, Asma?
Of
You
course,
could do
of
that.
course.
Yeah, vinnyzoom.com. And you could, come to that Wednesday. I teach only 1.5 hour. It's not like this presentation. It's more other like-minded people there, and they are bringing their deals, and we analyze the deals. We did one, actually. We found this 35 units multifamily plus 15 units in Idaho. One of the really sharp student brought it, investor, and we put so many holes in it. It just didn't make sense to go forward. So that's what I teach also in my coaching and other stuff. Oh, sorry about that. And then, of course, just text me if you want to talk to me, or anything, question comes up, just text me right there. And I think the last one is this one. That, oh yeah, there we are. That's what I do on Wednesdays. So lots of investors from all across USA, come in, and then we have an academy also. So you could invest with us, partner with us, or you can learn from us also in the mastermind how to underwrite. And we provide you all these things. It got me $30,000 actually, when I learned from Dave Lindahl. You might know, some of you might know Dave Lindahl, our mentor, and I spent $100,000 with my team and myself to learn this business, right there. But please do scan it, get all my 3 books. It's just a gift to you all for spending the time with me. I really, really appreciate you, each one of you, for taking the time away to listen to me. And I hope you learned something. And I hope you will invest with us. For the academy. We just want to give it to thousands of people. So we reduced the price to $47. You could scan this and you could become, and then you'll get attachments during the course. You'll see my video lectures, 174 video lectures. What? 174, but they're short and sweet. They'll teach you everything: how to raise money, how to put the deals together, what's emerging market, how to look at deals and talk to brokers. All those things are there. So that's on this side. And then this is all my books and all that stuff. So thank you so much. Oh my gosh, it just went back right there. If anybody has a question, love to answer that. I really want to thank each one of you for showing up and staying all the way through. If you would like to have any of these recording, we are recording this, by the way. So if you'd like to have a recording, please put down your email address so that we could send it to you. And if you'd like to invest in this hotel, which will be closing in 30 days, 30 to 45 days, you may like to let us know that too. And we can meet with you, definitely separately again. And you can answer all your questions and everything. So the free book is a good place to go right there. Oh, you have blocked. It says something. Okay, maybe it's the unable to access. Maybe it's the my this thing over here. Shield is up. Okay, if I click on it again, would that take me there?
It should, Vinny. It's
Yeah.
working on my
And
end. I think
oh
it's just
my
your connection
gosh.
error.
Yeah, maybe a connection error. Anyway, no problem. But please go to vinneychopra.com. Free benefits. That's where you will get that. Huh? That's where you
Yeah.
will get it.
And guys,
Anyway,
if you
if
want
any
to
question,
get the investor packet,
mhm,
please let me know and I will make sure to email it to all of you. I've got a few
mhm.
emails, but if you are interested solely in the investor packet, please drop down your emails.
Sure.
The recording
Mhm.
will be up on YouTube and it will be sent to you tomorrow in your
Yes.
emails as well.
Yes, yes. Again, thank you so much for your time. God bless you and see you in the next webinar. I try to bring the best of the best to my audiences so that they can really understand. And if you'd like to know more about it, please join my free 4 sessions also in the mastermind. If you really are very particular that you want to learn and, move to the next level and so forth, that'd be a good place to come. Thank you so much. God bless you. We'll just stop it right there and we'll see you in the next webinar. Thank you. God bless. Bye bye.